Okay. Good evening, everybody. Oh, maybe. That's probably because I've got the microphone on in the options room. All right, how's that? There we go. Okay. There's really not too much evaluation that we need to do because once we saw the markets rolling over, coming out of this little indecisive trading, and we know what our patterns look like, we could pretty much anticipate a wave 3 to the downside. And it worked out very well, obviously, so far today. I see after hours, the market, well, it's up 47, not anything. And so the important factor is that they closed below that low. Oh. Well, that's not quite flat, but you can see that this is wave 1, wave 2, going into wave 3. Yes. Can we estimate a target? You just factor there's wave 1, wave 3. Don't know where it's going to go, but the probabilities based upon knowing that we're in wave 3 is that we're probably still heading down. Well, let's see. They moved from 35 to 31 basically. And even if you counted from here, 33 down to 29, at least that far. Am I doing it right? 35. And so the other thing that we could, darn, I keep rolling this. That's not what I want to do. The other line that we, let's get rid of this, is that could be your next target. So is it going to go there? Who knows? That's at least a viable target. And if you use the same analysis on the NASDAQ, that is, trend. Same thing. Could come back down to the bottom of this channel. But whatever it is, do a Fibonacci extension. Well, I was doing a Fibonacci from here to there. Didn't quite get up to that level. Where would you do the Fibonacci for the next? Well, I don't even know how to do that because I never do it. Let's see. Is there a gap? Oh, on the NASDAQ. On the Dow, Oh, right in there. Yeah, that could be. So anyways, it really doesn't matter where it could go to. It's just right now, it's pretty obvious that it's probably going down. So yeah, I've got the Fibonacci retracement. I know how to do it that direction. Don't know how to do it in the other direction. Anyways, wave 1, wave 2, wave 3 at least tells us we could be moving, or with a high probability we're heading lower. All right. Crude oil held up reasonably well, staying up above the T-line, trading at $120.64 a barrel. And gold didn't hold up well. Let's see if there's a better gold. Yeah, that's just kind of a nothing chart. And I haven't even checked the grains in a while. Well, wheat is doing absolutely nothing. And soybeans, pretty much nothing also. So haven't been trading those. I didn't even check the hogs today. Hogs not really tradable, but cattle. Whoops. Cattle got whacked, but not in a good trading range. So I've gotten off base here, because here's the things right now with the market heading in this direction. There is very little reason to be jumping into long positions, even though you might have some good long positions. AERC continued its J-hook pattern, and RPTX, that wasn't it, RDBX, traded up at a lower open. You can still buy this if they open this positive tomorrow. That's telling you that today was just kind of a profit-taking day. Okay, so this is going to be kind of a lot. Now, let's do this real quick. If you need something on the long side, this one you look to see what the news was that created this breakout. That's ELTS. COGT, that one you can still be buying after your gap up. You want to buy this one on strength and use probably today's halfway point of today's candle as your stop. YEX is looking good if it opens positive tomorrow. And TGNA, why did I have that? What was I looking at? Huh. I don't know why I have that one up there, unless they reported something after hours. They must have. Where is TGNA trading? It might be trading up here doing a bullish engulfing after hours. I don't know, Jim. All right, so the other, if you don't like to go short, you can buy LabD. Looks like the biotechs are heading down. All right, so yeah, so I think I saw that TGNA trading at 21.31, so it's trading up here. And then another one that was trading up after hours, but probably is not yet a buy, is Oracle, was closing right up here somewhere. They came out with good earnings. Okay. So instead of trying to buck the trend and trying to find something that may be moving higher, and the only one I really saw had good strength is the AERC after this fry pan bottom breakout. Everything else was excellent short positions. And these were just recommended based upon identifying some sort of signal or pattern that gave us higher probabilities that it was moving in the right direction. So a short on CPNG was based upon this dumpling top after it gapped down. FRPT, evening star signal followed by a gap down. Shorted on weakness today. And then Etsy, because of the Doji Harami gap down, starting the next move to the downside. So this one could have been shorted today. TOS doesn't, oh, no, TOS doesn't show after hours, I don't think. But, oh, TC2000, the TC 2020 does. So this one is still an excellent setup for a short. And this is why when you see something like this, you suspect it's heading lower, you might start shorting at least a half a position here, because if you see that doji on the way down, that's kind of what you're looking for, is the next move to the downside, giving you a bearish doji sandwich. Same thing with Lightspeed. Look where the doji occurred, right here at the moving averages. So notice how they gap down. It's not unusual after they do a doji to gap it down again. Now, the probabilities are obviously that if the market looks like it's going to trade lower, and if this opens lower, you could be shorting immediately with little hesitation as far as, I got to see what my handwriting did here. So here's one that if this opens lower tomorrow after a big bearish Harami, look for another big down day with this being kind of your next target. So, but Etsy, the reason we were looking at that is because the volume is good, obviously, that if this opens lower tomorrow, what's it breaking? Pretty much breaking this level, telling us wave 3 is in progress. Now we've got another target where they could be bringing it all the way down into this area. So that's just kind of setting up your 2+2 analysis to improve the probabilities that you're not only in the right direction, but you're also in something that might be giving you a very strong move to the downside. As we can see, Cracker Barrel, ever since the gap down from the spinning top doji type day, failing at the 50. You have to enable it in time frames. Okay. Could be setting up for a rally in the corn and soybean market. Yeah, but yeah, there's nothing yet to show there's any rally in the grains. All right, so this is going to, again, be a lopsided analysis because everything's working great to the downside. Our ZIM, after the bearish kicker signal, working well. Upstart, still working nicely ever since our left-right combo followed by a bearish doji sandwich, with the expectation if this opens lower, they're still heading down into this territory. And this one has worked out very nicely. Intel, ever since the kicker signal, followed by a trend kicker signal that kind of breached this level, starting to head toward this area, which we anticipate would be at the 37. So we did the the June, the one that's expiring on Friday. We did the 40, 37, 50s up here at 39 cents with the idea that if they were cratering this market and they took this all the way down to 37, your 39 cents would now go to $2.50. I don't know where they closed after or at the end of the day, but I think it was pretty, at one time they were at $1.60. Can you briefly analyze the next potential support? Well, we don't really need to. Next support is probably this downtrend. That's your next support. Same scenario on the NASDAQ. More than likely at the bottom of this trend channel. So why would we suspect more downside? They're gapping it down. They haven't supported at the last support level, and your stochastics are still heading down, and there's been absolutely no indications of buyers yet. So there's nothing here to tell us this downtrend isn't still in progress. Let's see. So I had something to illustrate here. Upstart, again, had all this information as far as the bearish left-right combo, the bearish doji sandwich, the failure, somewhat the same as this one, with that rounding top breakdown. So these are the type of things you want to be looking for when you know the market's heading down. Which ones are setting up, getting ready for that big price move? And we'll come back to a few of those. Go-Go, same scenario. Look at your reversal, bearish engulfing right here at this level, close below the T-line, followed by a bearish doji sandwich. That if this one had opened lower today, you could be shorting it immediately because you got a sell signal and now a bearish doji sandwich, which in conjunction with the market heading lower or appearing, well, opening lower, you wanted to short that one right away. NCNO, same scenario. This is kind of observe the obvious. When you have a bearish kicker signal that failed right at a major moving average and a close below the T-line, that is pretty much telling you they aren't going up through this level. Your downtrend is still in progress. and Carvana. Move these. Still heading lower. It bounced up a little bit after being down $2. It closed off being off 98 cents. But at some point, I closed out a lot of the puts today with good profits. But this is the type of stock where they might come out and say they're having financial troubles and they crunch it. So what was the most conservative way to take advantage of that? You put on another put spread. Now, here is one of the conundrums of a put spread. Fortunately, I could close out the 30-25 spread. I want to say I closed it out at 460 or 470. So there was still 30 cents left in it. But the question becomes, do you want to keep 470 in to make another 30 cents? Or you might be able to take that 470 and go find something that's going to produce 2 or 3 points. So close those out. But I also had a 24-20 spread. I paid very little for, anticipating if they kept heading down, that could go to $4. I forget what I paid for it. It wasn't like, I think it was like 60 cents or 65 cents, with the idea that if it headed to 20 by expiration day, which was this Friday, that would turn into a $4 trade. Well, today it was trading at as low as 1980 with only 4 days to expiration. And the puts on the 20s were still trading at $1.60. So if you do the math, the 24s were trading at around $4.10. Not a lot of premium in them. But the 20s were trading at $1.60 most of the day, which meant where you would anticipate this spread to have been closer to $3.50 or $3.70, it was only at $2.50. And that's because the premium on the 20s were so large. And that's why I was pointing this out to say this is why you want to stay fairly close in, meaning within a couple weeks to expiration, because where will that maximize profits? On Friday, if it's trading at 20, that means now that spread is worth $4, because the 24 puts will be worth 4 and the 20s will be worth 0, or the net will be $4. So that's why I advise not going too far out in the future for doing a spread, because you want to maximize the profit when you get very close to expiration day. Let's see. So as you can see on Q2, that bearish Harami best friend gap down with a lot of instigation to tell you the sellers. LT, I just do vertical spreads. I don't want to spend a lot of time each night analyzing the best option trade. I want to look at the chart and then figure out whether I want to be doing a spread or buying puts outright. And I don't want to be spending 10, 15, 20 minutes analyzing each one. I did an FC put for 2 weeks out. No, as far as a put, a straight out put, Kathy, usually if I don't see a spread that's going to work, and maybe they don't even have weekly options, might be I'm not going to buy the puts on June because it expires in 4 days. I'll buy the July's. But that's a put out or outright. If I was going to do a spread, then I'd take a look at the ones that are going to expire, maybe 11 trading days or 16 trading days. So on Etsy, forget what I did. Yeah, so yeah, but it's the shorter time frame. But however, the longer time frame cannot, or sometimes is not beneficial, because you might have and for example, same scenario here on my put spread on Carvana. If this was 3 weeks out, and let's say I paid, I'm just going to pick out a figure. Let's say I paid $1.20 for a put spread, and it moves in the right direction, and it's 4 weeks out. That $1.20 might go to $1.10 or $1. It might not go up, even though the price of the stock moved in the right direction, because again of the amount of time premium you have on both sides of those options. Okay, that might be one trade. I was trading so much today, I can't remember which ones I did. Thank you, Andrew. Did I do the 65 puts? All right, on Etsy. Oh, in July. All right. So that was far enough out that I just wanted to buy the puts. Now, there's another aspect to putting on a put spread. The volume and the open interest. If there's not a lot of open interest, not a lot of volume, you might not get that spread executed, because what's the logistics? They have to have somebody buying one side and selling the other side pretty much at the same time so they can do that spread. So if there's not a lot of volume, or if there's a lot of volume on one side and very little volume on the other side, they might not ever get that spread done, because the side that has low volume never gave an opportunity to put the spread in place. So whenever I look at the options and I take a look at the open interest, if there's only 65 open interest and 45 on the other side, I'm not going to do it, because there's not enough volume to get that done. When you have things like Amazon or Apple, those are much better to do spreads on, because you got tons of volume on all those options, and a spread can be done very quickly. So here's one that I was looking at seriously. I keep forgetting that Amazon's now down here in the 100 range, that you can now buy puts and calls for $2 or $3 instead of $23 or $35 options. So here's another one that if they open this lower tomorrow, expect your bearish doji sandwich, which tells you this level is not going to act as support. Probably going to be on another wave like this. And Moss, when it was rolling over and did not hold this level, kind of a wedge formation. When it broke that level, where do you think the next target was going to be? Right down here to the 200. Why? Because that's what everybody else is watching. So Apple, bearish J-hook pattern. That gap down through this level. Netflix. Oh. Look for this as your next target. NVIDIA, we did puts on this one today. Because look where it closed. Back below that level. Meaning they opened this lower after gapping it down. That tells you there's a lot of force, and look at your stochastics. Still a lot of room to the downside. Which means, where do you suspect your next target? Well, now let's get rid of that. Kind of somewhere in that range as your next target. Okay. And Tesla. So the important aspect of knowing that the market is heading down, or an additional aspect of knowing the market is heading down, is now you can figure out which one of these stocks have the best signals or patterns. You can see the bearish doji sandwich on Tesla. That if they trade this lower and get below here, they're still selling it off. So this is the compelling factor. Not what all the talking heads say as far as, oh, we're nibbling at things, and right now there's no buying going on in this market. That's what the market is telling us. So this, again, is observe the obvious. It's, oops, hold on, I'm going to adjust things here. Bearish doji Harami gap down right at the 50. LNW, bearish Harami gap down right at the 50. I mean, that tells you something. I mean, that basically tells you this is where they're selling. That becomes much more compelling to tell you that's where you want to start shorting. Same thing on app. So look what we've got here as far as I'm sorry, trying to get the failure of the evening star signal right here at the 200. I'm sorry, at the 50. Puts you in a downtrend. Is this still shortable? Definitely. If this opens lower tomorrow, now what do you have? A bearish doji sandwich with stochastic still heading down, breaking this level. Where do you think the next level is? Fill in the gap and then down here. So this is just putting that 2 plus 2 together. Net and evening star signal, failure right here at the T line and the 50, breaking this level. You stay short until you see a buy signal. SI, evening star signal, bearish doji sandwich, another one that you could short on weakness tomorrow. Now, when I say weakness tomorrow, that's also going to be, oh, I didn't want to do that. What did I just do? I just eliminated something. 34, I guess. All right. CHPT, good evening star signal, gap down, first target, second target. CSIQ, look at the gap up. So what was our alert? Make this a little bit smaller. Where do most people buy? They buy exuberantly at the top. Gap up right about in this area. then a Doji Harami, shooting star, shooting star. Where do you think the next target could be? All the way back down into this area. So there's a ton of good short situations right now. Get rid of this. Another one that broke this level by gapping down after a bearish doji sandwich. BCRX, a failure right at the 50. If this opens lower tomorrow, a bearish doji sandwich taking you down further. This will all be kind of collaborated, if that's the right word. If we wake up tomorrow and the pre-market futures are showing the Dow's going to open down another, the Dow's opening down another 200 points. Salesforce, Doji shooting star gap down. Where is it heading? Back down to the bottom of this channel. DraftKings, where did this fail? Right here at the 50 at this level. Gap down through here. Where's this one heading? This one could be heading back down to the bottom of the channel. So there were a ton of these type of charts tonight. And that's pretty much because the market's selling off. MicroStrategy, that gap down, if this opens lower, you short it immediately. And VTS. Look at the big reversal signal, your bearish left-right combo, evening star type signal, and now it's not supporting at that level. It gapped down. It gapped down through that level. That tells you they have no more regard for that as being a support level. Yeah, that really doesn't mean too much right now. I'm going to see a little bit of bounce around. So remember, what the futures are doing right at this moment doesn't mean a hill of beans until about 7 minutes before the market opens. This is the type of thing you want to be looking for. Is when you start seeing these slow curves, that's where they start crunching some of these. So Sava was kind of in that same category. Slow curve, I would definitely be shorting Sava on anything on a lower open tomorrow. And SMAR. Look at your bearish flutter kicker signal. Wave 1, wave 2, in wave 3. So we got a ton of good-looking charts to the downside, because when they're gapping it down, you might see a bounce, but the bounce would be just short covering. But as of right now, with the indexes trading below the last low point, you got to assume we're in a downtrend. It might not be a fast downtrend, or they could be gapping it down again tomorrow with the expectation of, or not knowing what the expectation is of the of what they're going to do with interest rates. When do they announce? On Wednesday? Okay, so that's about all I got for right now. But there were just tons of stocks that look like this, where they're just gapping them down. WB can't even make that conjecture. It might be they sell the market off because they only did 50 basis points, where everybody knows that they're so far behind that they need to do 75 or maybe even a dollar or a 100-point move. So we can't make that assessment. The only assessment we can make is no matter what they do, we can see what the market reaction is to it, know what the results are. Okay. About all I got for tonight. Are there any general questions on candlesticks? Yeah, the rumors are 75, and now they're even talking that even if they did $1 or 100 basis points, that wouldn't be unexpected, or that'd be kind of trying to catch up. So there's no telling where do the rumors come from. That's just from all the talking heads on financial news stations, or they will say, well, what do you think they're going to do with the rates? Well, they could be doing 75 basis points, or even possibly 100 basis points because they're so far behind, blah, blah, blah. So that's how all these things get, Putin did it. So definitely want to take a look at things that have strong sell signal prospects. Again, the more you can add into your analysis, left-right combo, bearish, double doji sandwich, a lower open, the assumption has to be that until, you probably got to figure we're in a downtrend. So if we analyze that we're in a downtrend, what are all the possibilities? Well, they could bounce it for a day or two, but the fact that they've been gapping it down tells you they want to get out of this market with great enthusiasm, and it's probably there's not going to be something and all of a sudden turns around investor sentiment so drastically that it's going to take the markets up. All right. I guess with that, then, Jim, go ahead and do the double line. And in 4.6 seconds, Will, that's right. There isn't that it's, it's on the fringe of panic selling, but they took it down today and then brought it back up. And then they took it back down, so it wasn't like everybody was just bailing out. ALKS, that's another good one to short. And Fisker, stay short. No, I don't think you want to be using that criteria, because for all you know is maybe they bounce it around tomorrow and the stochastic or the T-line is going to be down here. So right now we just have to assume that the sellers are in control. Boeing had a good bearish chart. That one I wouldn't be afraid to be shorting on weakness. A bearish J-hook pattern. Teradyne, just stay short. Obviously, they didn't hold this level, and look at the failure at the 50. AMGN, I would suspect they're coming back to the bottom of this channel. That should be your first target, or even down here at the 200-day moving average. FTNT. Another one that you can short. The doji best friend gap down. First target here. First target here. NVAX. Let's see, did we do that one? No. That one you can short because it failed to hold this line with a bearish doji sandwich. AMAT, stay short. Micron, stay short. AMD, stay short. You can see how it broke the trend channel. NetEase, you could short this one. Might not have big downside, meaning probably supporting back here at the moving averages. So I wouldn't be long, but it probably wouldn't be my first choice as far as a short situation. Cisco, you could short this one on weakness tomorrow because of the doji sandwich prospect. And another one where you could be shorting this one on weakness also after the failure right there at the 50. ETCF, Evening Star Signal, broke this level. You could short this or stay short on it. Gas, just kind of drifting higher. Nothing. I wouldn't change direction on it. And same thing with crude oil, except we can. Let's see, crude oil index. Where is crude oil? Still trading up pretty well. 10. Failure right at the 50 with a doji. This is why I always say watch to see what it does when it gets to the resistance level. In this case, we saw it do its doji shooting star. So where do you think the next likely target could be? Well, obviously the bottom of this trend channel. Freeport, ruh-roh. Well, what's going on here? There we go. Another one you could go short. Bearish Harami right at the 50. Marathon. Oh boy. I wouldn't be long. I don't know whether I'd be shorting it though because of the 200 being a support level. So that's probably, I would be saying I wouldn't be long or short on this one. VU, stay short. IRNT. I don't know whether you can short this one. You definitely don't want to be in this long. BZ, oh boy. This is a perfect example. When they were gapping up doing a doji in the overbought area, if you were long, if it opened lower, you closed it out because where was it going to come back to, the T-line? Right now, I would not be long, and I don't think it's just got too much congestion right in here. Love, I'd be more apt to short this one because you can see the bearish J-hook pattern. Well, for crying out loud. The bearish J-hook pattern setting up. First target, and if it breaks there, obviously wave 3. Oh, it's done based upon the price. So if they're going to split this 5 for 1, and you've got one put, that means now you have 5 puts at whatever 1/5 of this price is. So if it's, looks like it'd probably be around 53 or so. And if it's not an exact number, Gail, what do we got? A smorgasbord going on here. That's why sometimes when you look at an option ladder, they'll have odd numbers. They'll have sometimes odd numbers because of a split like that. Yield, stay short. Lab D, you can be going long on this one. Now, for crying out loud. Lab D, stay long. The golds, is this the short index? You could be buying this one. And UVXY, you can be long on that one. DIX, now. DIX, stay short. Yes, crude oil right now at about 120.96. Which you can see is still above the T-line. Edu, you could still be buying that one. Then use the 50 as your stop. Dominoes. Stay long. I wouldn't want to see it close back below the T-line. You can buy this one on Positive Trading, HILS. Chewy. This one you can get ready to go short if it opens lower. Probably wouldn't be the best looking short, but it looks like it's starting to do a bearish J-hook pattern. And you stay long on AERC. The 20-year notes still selling off. You can be shorting these or buying the, was it TBT? You can be buying the short fund. Now I forgot where it was. DIX. All right. DIX, would the target be short? Yeah, that would be the first target right there because everybody sees it's been there. Gas, you can stay long on this one. Just don't let it close below the T-line. Okay. Yeah, I wouldn't be too concerned. I mean, you might see a bounce tomorrow. You might see a bounce right up to the 3T line. But there's nothing yet telling us there's any change of investor sentiment. All right, Terry, I'll take a look at it. This one you can stay long. I'd probably use today's low as a stop. I'd be a buyer if it came back up to today's open. Okay, thank you, Terry. Okay, so watch to see what the pre-market futures do first thing in the morning. If they're down again, look for people to be bailing. bailing out. Valero was a perfect example of if you saw the market turning over and knew they were starting to bring things back toward the T-line, you wanted to close it out. Or it had to open positive today. When it opened lower, you closed it out. I don't know whether I'd go short because of the uptrend, but I definitely wouldn't want to be long right now. All right, everybody. Whoops, we're done early. This is new. All right, Dale, what do we got here? If you like this one, you can be buying. Now, I wouldn't be going after a lot of things aggressively in these market conditions until we at least see things start slowing down to the downside. Okay, we will see everybody bright and early tomorrow morning. We'll see you.